You're watching Masters in Trading Live with Jonathan Rose.
Hey guys, it's Jonathan Rose and welcome to Masters in Trading Live. How's everybody doing out there? I got the chat open. I love getting in early saying good morning to everybody on the chat. So what are we doing? So my name is Jonathan Rose. As I said, I get on here live every day the market's open. Go over the market, share some thoughts. Once in a while, we'll share our trade of the day. Literally, I get on here each day to try to add as much value to you as I possibly can. I've been trading in the markets for 27 years now. I've done everything from trade on the floors in Chicago, the Board of Trade, the Chicago Mercantile Exchange, the Chicago Options Exchange. I've worked for family offices. I've worked for hedge funds. I've been in the business. I know what I'm doing. We're not just looking for short-term opportunity. We are looking for unusual options activity. We're looking for story-driven trades. We're looking to manage an entire portfolio. I teach how to trade more of delta neutral. So we want exposure to the upside and to the downside. But overall, teach you guys how to make some money in the market. That's what we're going to do today. I want to talk about something that is so important. And it's the expected move in options. I got to itch my eye first. The expected move in options. You do not need any options experience to understand what the expected move is, why it exists, and why it matters so much. Using the expected move, it will make you find trades that are just common sense. Like, wow, the market shouldn't be doing that. We're going to bounce. So that's what I want to talk about today, the expected move. It's so important. I'm going to tell you what it is. I'm going to show you some examples. And by the end, I think I'm going to convince you that this is something that you need to start following. All right, I got the chat open. Let's go. Let's have some fun. Now, this has been such an important topic because yesterday, what did we see? We saw our president, the president of the US, Trump, and Elon getting in a spat over Twitter, okay? These two guys were going after one another, and then Elon posted that Trump's in the Epstein files, and because of that, the stock Tesla started to get hit really, really hard, thinking that, oh no, you can't say anything about the president. He's gonna come and take away all your subsidies. So what happened? Tesla, during this spat yesterday, started to free fall. And I don't know if you guys were watching. Were you guys watching Tesla free falling at the end of yesterday's trade? Well, Tesla went from like 320 all the way down to 275. I put this in our Discord. I also tweeted this on Twitter. I'm not really that active on Twitter, but guys, Tesla, the bottom of its expected move is 275. There is some serious option hedging that needs to go on at that level that is going to lift the stock. How options work is there's an expected move that option traders need to hedge around. So I'm going to explain exactly what the expected move is. Here it is, okay? We need to learn this. You do not need options experience to learn this. This will just make you a better trader. The expected move is how much the market thinks a stock will move either up or down by a certain date, like an options expiration. It's based on the options prices and show you the range where the stock is likely to trade with about a 68% confidence. So you have your traditional bell curve, right? Which looks like this, where 68% of the activity falls within the bell. And then you have your wings that are higher standard deviation outcomes that don't happen nearly as much. But the expected move is the math behind options on why 68% of the time it's going to stay within that expected move, right? Think of it as the market's forecast for how volatile a stock will be, not whether it'll go up or down. A little example, if a stock is at 100 and the expected move is 5, the market expects the low of 95 and a top of 105. That's how the expected move works. So yesterday, when Tesla started free falling, and Tesla was free falling because people were scared, Elon's aggressive texts, what is that going to mean? Is the administration going to come down on Tesla? Maybe, who knows, but that's why there's volatility. Everybody's getting out of the way until the option traders come in, and the option traders are forced to hedge their positions. They're buying stock to hedge their puts. They want to do that trade. They have to do that trade. That is why Tesla bounced from 275, last trade right now. Let me pull up Tesla for you. If I can find my mouse, there we go. Boom, right here, okay? Now, sometimes it gets the expected move and it's really strong and it goes through. But overall, the message is that option traders are forced to hedge at these levels. So when the market sells off at these crucial levels, it's not random, it's math, right? Where do you want to risk your money, on the random or on the math? So that's why Tesla, Ernie, attaboy, Ernie bought some calls when it crossed 278. Hopefully that means it traded 275, then traded 278 on the upside, and that gave him the confidence to get in on those calls. So let me give you a few more examples. Rigetti. Rigetti is an actively followed quantum stock, right? I know many of my guys are involved in Rigetti. But look at Rigetti. Rigetti closes within its expected move 75% of the time. Okay? So since Rigetti started trading options, it closes within the expected move 75% of the time. So if you're looking for places to get in, getting in by the expected move is a sensible place to get in, right? If you're long and you want to take profits, taking profits at the expected move is a sensible place to take profits and take off your risk. Again, you don't need to have any options experience to follow the expected move. Here's another name, MUB. The MUB is municipal bonds. Now, municipal bonds are widely traded. This is an ETF that billions of dollars are in this ETF. The MUB stays within its expected move, has stayed within its expected move 86% of the time. So when the MUB gets killed, like it did in April for Liberation Day, notice how it tries its hardest to come right back into that expected move, right? Same thing here. Look, hedgers, 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 okay? There's a reason why stocks trade in a way that they trade. And learning the mechanisms of options are going to make you a smarter trader. We always like to say, education mitigates risk. Learning something like this, it mitigates your risk. It makes you a better trader. Ruger, another name, gun manufacturer. Ruger trades down. Outside of expected move, it trades right back up. Here it trades close to its expected move. Here it trades right to the top. Doesn't really necessarily break through, but again, there's some nice resistance here as well. It's really, really powerful, and I implore you guys, learn about the expected move. FCX, we have positions in FCX. We took off our positions in FCX. We're live, guys. Sorry, we're not going to edit that. We have positions in FCX. We're locking in profits. Why? Because it's trading to its expected move. We expect to get a pullback at that expected move. We don't expect FCX to just plow through. So we get on prints. We're willing to cover trades, okay? Next topic is a doozy. I'm excited about this one. Show of hands. Who's in QXO? QXO, I shared this trade with everybody May 20th. Who's in QXO? Let me get some yeses or hands or clapping because I just want to be able to use my glockenspiel. Yes, yup, yes, 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 yes. That's what I want to hear. I love hearing that. Glockenspiels. Okay, guys. All the yeses, all the yeses, all the yeses. We have a trade in our free portfolio. Once in a while, we'll share trades with our free portfolio. 519. Guys, get long this stock. 1686. It is time, right? Well, Wolf Research comes out today with a price target of $44 freaking dollars. I love this trade. Wolf Research joined on this trade. Last trade, what are we trading at? 1911 when I printed it this morning, getting long from 1686. Full disclosure, we are long this name. We are staying long. We are long options in our all access in our premium portfolio, and we are staying long the stock. Make 55%. Excellent. Love it, guys. Glenn, QXO, loving QXO. Guys, I really, three reallys, guys, that means I like it 3x more than other trades. QXO, Danny got out for a little profit. Glenn's up 200%. Woo, whoo. But I love this, guys. I am not covering QXO. We are buyers of QXO. I think this, I was going to say puppy, but I want to say wolf is going way, way higher. So what QXO did, guys, and why it stopped going up is because they just raised money at $19. At $19, the first time it got up there, they raised $1 billion. Stock sold off, barely sold off. They have $1 billion more in spending, and now the stock is going up. I am a monstrous, huge fan of QXO. Hopefully you guys have that trade. Hopefully you're staying in that trade with me. I think that's what I got, guys. Really fun week. If you're interested in learning more about Masters of Trading, in the chat, Chris Warder threw the contact info. Give us a call. We got some cool promotions going on. Get you behind the door into the Discord room where we're having all that fun. For everybody in our all access community, you guys hang out. We'll be right back. Thanks for posting the number, Chris. It's 1-800-304-5601. Give a call, and I'll see you on the inside.